What's happening within the Indian hospitality space, a traditionally strong quarter. But let's try and understand what the chatter is all around in terms of the trends that we're currently seeing. We've got Prashant Biyani joining in on the show right now. Prashant, hi, morning. Good to have you on ET Now. And firstly, wish you a very happy new year from all of us.
Same to you.
Right. Prashant, let's start off discussing what's happening within the hotel sector and how the pipeline is looking like. Because a lot of mixed signals is what we're hearing, that while, the urban and premium end of hotels continue to do well, that's not quite the case with some of the mid-range or even, some of the down-the-line hospitality chains.
So hotels is a very top-down sector. So it is not that only the top end or the luxury end is looking at good demand growth. There is demand all across categories, be it luxury, upper upscale, mid-scale, ups. So all segments are seeing demand growth. So, for example, if luxury end is seeing good growth, then we are likely to see a decent rate increase in that segment, may, uh, which increases the difference or the discount between the rate of a luxury hotel and a upper upscale or a upscale hotel, which automatically shifts some of the demand to the lower end versions, also giving them the capability to do price hike because of the widening discount between upscale and a luxury hotel. So it is not that there's demand only at the top end. Mid-scale, upscale, all categories of hotel are seeing good demand.
Okay, point taken. But what do you think is going to be the problem, if at all, anything for the hospitality sector? Is it like the demand is plateauing, or there's a possibility or a potential supply glut trying to face us now?
Actually, demand is pretty good, and H2 is a holiday season or a peak season for the industry. In Q3, we have seen very good demand from both business and leisure. We had higher number of marriage days, 33% increase in the number of auspicious days for marriage in Q3 versus last year. So MICE demand has been very good. Demand is not a challenge at all. We are seeing or we are expecting rate increase to be in the range of early teens. And as far as business on books is concerned, I think for Q4 also demand looks to be quite good. And if we fast forward to Q1 of FY25, so this year Q1 we had election season, which led to dampening of demand for the industry in Q1. So for Q1 next year we are sitting on a very high base. So Q3 looks good, Q4 and Q1 looks good. So 9 months back to back, we are likely to see good occupancy increase as well as decent rate increase for the industry. So I don't see a challenge at all. With regard to the new supplies, what we can say is that while the pace of signings have been frantic across the industry, but the new supplies is pretty diversified between leisure and business locations. So if you look at the last pace of supply increase, which happened during 2009 to 2014, at that point of time, the room increase were mainly in your business locations. But this time, the supply increase, which is expected in the next 5 years, it is well diversified between leisure and business locations. Secondly, on the business side as well, if you look at the number of micro markets that we have 18 years back and the number of micro markets that we have now, every micro market needs two or three good hotels. So even on the business side, if we have more number of hotels, it is unlikely to see a very high increase in supply, except maybe one or two micro market across business and leisure. I don't see a risk of supply anytime soon.
Right. The other thing that I wanted to understand, Prashant, right now is in terms of, the listed entities out there, what is it that you're making in terms of the run-up which has already taken place in the sector, and how much more of a value unlocking can we see going forward? Are the stocks for now looking priced to perfection?
So while we have seen a healthy run-up in stock price, that has been supported by a very strong earning growth as well, which is likely to continue for the next 1 or 2 years as well. That is what we expect to happen. And so I don't think that there may be any correction in the stock price unless the market itself corrects. So I think we are in for good growth even from here. For the likes of Chalet, Juniper, Indian Hotels, all these stocks should do pretty well, both in terms of earnings and stock returns as well.
The latest entrant on the street is going to be ITC Hotels, and the chatter is out as to what could be the listing price and what could be the, profitability one should bake in. What's your own assessment as to what could be the listing price perhaps, and what kind of numbers should we pencil in?
So I think that the market cap post listing could be between 30 to 35,000 crore. So it may be just next to IHCL in terms of ordering, in terms of market cap. Earning growth wise, I think 15-20% growth in EBITDA and PAT could be doable, given the kind of pipeline that they have on the management contract side as well as own hotels.
Do you think there could be a bit of a shift at that point of time from, Indian hotels to ITC hotels?
See, gone are the days when people used to have only one or two hotel stocks. Right now, because earning is so much in favor of the industry, I think most of the investors have more than one hotel stocks in their portfolio. While IHCL is the default choice for the larger funds, but I don't think people will shift away from IHCL in favor of ITC. They may look to have ownership in both. But because of the kind of earning support that we are having in IHCL, I don't see a shift in terms of investors from IHCL to ITC. It could be an addition to portfolio as far as ITC hotels is concerned.
Okay, a basket of all is what Prashant is recommending. Good to chat with you today. Thank you so much.